Frank Napolitano is joining us from Mortgage Brokers Ottawa. Great to have you on the show.
Great to be back.
You're like a wealth of information as we're kind of chatting through things, and a lot of different topics that we can hit on today. So I'll kind of, where do you want to start?
Well, we'll start off with OFC. In the last show that I was on a few weeks ago, we talked about how some potential rule changes were possibly coming down the road, and we did get some news on some of the recommendations. One of them, we talked about mortgage renewals, and when mortgage renewals came up, there was some talk that there was going to be some pressure put on the banks to actually requalify the customers, and thank God that they chose to leave that the way it is. And their decision making is based around the fact that, let's face it, the banks are doing fairly well on the profit side, and they've been very responsible. The reason that we haven't had the house slide that we see in the States and in other countries is because the bank has been extremely responsible when it comes to lending, and they've qualified people the way they're supposed to. Therefore, at the renewal stage, they've chosen to leave it the way it is, where right now what happens if your mortgage comes up for renewal and you've made your payments on time, you get a renewal notice. You don't have to go back and say where you work and do the normal qualifications because you made your payments on time. Therefore, it makes sense to just offer the customer renewal. So that's good news.
So that's one of the on the bright side. Another thing we're talking about is home equity and lines of credit. Right.
So the home equity lines of credits today, you can go in and you can get a home equity line of credit for up to 80%, and it used to be as high as 95%. They've scaled that down to 80%, which was great, and everybody agreed with that decision. Now there's talk that they might recommend that number being dropped to 65% loan to value. So, you know, for the homeowner that isn't using the money for investment and is using it as a mortgage, I can understand, because the requirement on a home equity line of credit is that you make interest-only payments. So therefore, there are many customers out there that never pay that home equity line of credit down.
It'll never happen. That they'll actually pay it off. They're just kind of waiting to see equity. It just doesn't happen.
They don't. If it's your actual home. Now, where I disagree with it is that if you're using that equity to go out and buy an investment property or buy some investments and try to grow your equity, you know, now they're limiting customers to 65% instead of the 80%, which takes away some of their power to be able to go out there and possibly buy an investment property or a different type of investment.
But you would hope that the people that are making these decisions, though, are in the position to be able to look into buying second.
For sure,
third,
I think that there's a
more
conservative
investment opportunities.
Well, what they're doing is they're forcing those customers. You can still borrow 80% and really up to 85%, but without default insurance, 80%. But now what they're saying to those customers, if you're going to go out and buy an investment property and you're going to borrow at 80%, you're not going to be able to do it via home equity line of credit. You're actually going to have to take out a mortgage.
Okay.
So where you're paying down the principal, which again, I mean, it's the idea of buying an investment property is that you write off the interest from a tax standpoint, and then you put your extra money towards your mortgage. So
that's something that hasn't happened yet, though. They're just looking at being able to decrease those numbers. When you're talking about investment opportunities, too, you were talking about an interesting thing about buying certain types of buildings.
Right, and it's incredible. I had a conversation with the lender on Friday, and he said, Frank, you realize what the interest rates are on the big multi-unit buildings. So the buildings where there's 6 units and more, so a building where somebody owns 20 units, they can actually get a 10-year mortgage for anywhere between 3.25% and 3.5%, which is unprecedented, because typically on those multi-unit mortgages, they're typically higher than the standard residential mortgage. But because the bond markets are so low right now, and they use the bond market to price those mortgages, the interest rates are actually lower than the residential rates, so which is incredible for people that own those big investment buildings right now.
Which is, you know, a certain individual looking to be able to purchase on that level. But interesting that you're seeing a change in the numbers. One thing that you mentioned, and that has a lot to do with what we're seeing on the European markets, is to, you know, there's that constant when the rate's going to go up, and then you're saying there's a lot of influence right now coming from Europe.
Well, the influence is that they're basically in trouble. I mean, you know, Spain just got bailed out to the tune, I think, of 125 billion, and they potentially, they say that Italy's the next country that may need a bailout. Because of that, what's happening is there's no confidence in the bond markets and in the markets in general in Europe. So the money is moving here to Canada and the US, and in turn they're putting it into bond markets because they want that safe haven. And when that happens, the bond markets typically come down. And when bond markets come down, we see where we're at right now, where you can get a 5-year mortgage. I think we've got a lender that's offering us a 5-year mortgage at 3.05 right now. all the bells and whistles, and then you still got the 10-year at 3.89, which is an incredible mortgage rate. So
3.05.
3.05 for a 5-year fixed right now. Incredible, eh?
Yes. I
Yeah.
mean, a lot of people are kind of doing the numbers in their head right now, and as we're seeing, a lot of different opportunities. Best way is for you, honestly, you like it when people call, when you ask the questions, and come in and just look at your options.
For sure. And people in variable rate mortgages, you know, they call me a lot. Should I convert, get out of the variable, go into a fixed? And depending on their scenario, I'll give them the advice based on what I think they should do.
All right. Always wonderful to be able to check out their website, mortgagebrokersottawa.com. Frank, we'll see you in, what, 2 weeks?
Yeah, a couple of weeks. We'll be
2
back.
weeks' time.
Yep.
Holidays?
Looking forward to it.
Any trips?
Maybe in July.
Okay.
Yeah, maybe in July.
All the kids' sports are done.
The kids' sports
Oh, wait,
will...
no, football?
not football,
Yeah.
yeah. All sports.
It gets busy for you.
Yep.
We're going to take a commercial break.